As I write this, Intel Corporation, ticker symbol INTC, is trading live at exactly $40.07. The market is open, the order books are flashing, and we are seeing a very specific, slightly defensive intraday movement where the stock is down about 1.19% on the session, oscillating between a high of $40.56 and a low of $39.60. If you are looking at your screen right now, you are seeing a battle for the $40 psychological support level. The bears are trying to push it into the 39 range to trigger stop losses, while the bulls are stepping in with volume every time it dips below that $40 handle. This isn't just a random Monday fluctuation. This is a market deciding if the recent 10% surge on Apple partnership rumors is real or if it's just another buy the rumor, sell the news trap that has burned Intel investors for the better part of a decade. The expectation right now, the narrative that most retail investors on Robinhood or those managing their own Fidelity IRAs are buying into, is that Intel is a dead money legacy giant stumbling around in an AI world built by Nvidia. The general sentiment is that they missed the mobile wave, they missed the AI wave, and now they're just a government-subsidized construction company building empty factories in Ohio. That is the expectation, exhaustion. But the reality? The reality is significantly sharper and more dangerous than that. We are sitting here exactly 1 year after the sudden retirement of Pat Gelsinger, and under the leadership of Lip-Bu Tan, the company has quietly shifted from a loud, promise-everything marketing machine to a ruthless operational grinder. The reality is that for the first time in 5 years, the Foundry strategy, the idea of Intel building chips for its rivals, is actually showing empirical proof of life. When you look at the price action today, hovering around $40.07, you have to contextualize it against the bombshell news that has been circulating over the holiday weekend. We are seeing credible reports, specifically from supply chain analysts like Ming-Chi Kuo, suggesting that Apple is preparing to use Intel's 18A process node for its entry-level M-series chips by 2027. If you're sitting there sipping your coffee, you might think, 2027? That's years away. But the market is a discounting mechanism. It trades on the future today. If Apple, the company that famously publicly fired Intel 5 years ago to make its own silicon, returns to the fold, even for low-end chips, it validates the entire multi-billion-dollar turnaround thesis. It proves that Intel's manufacturing technology has finally caught up to Taiwan Semiconductor Manufacturing Company, TSMC. However, we need to strip away the hype and look at the gritty details of what is happening on the trading floor. If you are executing trades through interactive brokers or using the advanced charting on the Fidelity trading platform, you will notice that the volume today is slightly lower than the 30-day average. This tells us that the smart money, the institutional giants, are waiting. They aren't chasing this headline yet. They want confirmation. Why? Because we have been here before. We have seen Intel pop on news of a potential customer, only for the deal to evaporate or face delays. The skepticism is healthy, but the difference this time is the sheer desperation of the geopolitical landscape. The United States government, which now holds a non-voting equity stake in Intel as of 2025, essentially cannot allow this company to fail. This is no longer just a stock, it is a national security asset. Let's pause on that for a second, because it changes how you should analyze this position in your portfolio, whether you use SoFi Invest, Schwab Intelligent Portfolios, or a traditional individual brokerage. Most stocks trade based on earnings and growth. Intel is trading on survival and sovereignty. The recent lawsuit filed by TSMC against a former executive alleging they leaked trade secrets to Intel is actually a bullish signal in a twisted way. It implies Intel is getting close enough to the cutting edge that the market leader is getting litigious. TSMC doesn't sue irrelevant competitors, they sue threats. If Intel wasn't making progress on its 18A node, TSMC wouldn't care. The fact that lawyers are involved suggests that Intel's foundry capabilities are becoming formidable. Now, let's look at the broader semiconductor sector. Nvidia is still the king of the hill, commanding a valuation that makes Intel look like a penny stock in comparison. But the AI trade is shifting. For the last 2 years, it was all about training models in massive data centers. That's Nvidia's playground. But 2026 and 2027 are going to be about edge AI, running AI locally on your laptop, your car, your phone. That is where Intel's x86 architecture, specifically the new Lunar Lake and Panther Lake chips, actually has a fighting chance. If you are holding Nvidia stock, you are betting on the cloud. If you are holding Intel stock at $40.07, you are betting that AI comes down from the cloud and lives on your desk. It's a contrarian bet, but it's the only one that makes sense for a value investor. I want you to take a moment and comment below how many shares of Intel you currently hold and what your average buy price is. Are you one of the people trapped at $60 from the 2021 highs, or did you scoop up shares in the 20s during the panic of 2024? I'm genuinely curious to see where the pain points are for this audience because the psychology of the holder base dictates the resistance levels. If millions of investors are just waiting to break even at $45, that level becomes a concrete ceiling that the stock will struggle to punch through. Moving deeper into the financials, let's talk about the cash burn. This is the elephant in the room that every bear on the Robinhood app loves to point out. Intel is spending historic amounts of capital, CapEx, to build these fabrication plants in Arizona, Ohio, and Germany. We are talking about tens of billions of dollars. For a long time, this crushed the stock because it destroyed free cash flow. But under the new CEO structure with Lip-Bu Tan driving execution, we're seeing a shell-first strategy where they build the building but only fill it with expensive equipment when they have signed customers. This capital discipline was missing 2 years ago. In Q3 of 2025, Intel reported revenue of $13.7 billion, a modest 3% year-over-year increase. It sounds like not much, but it was the first time in ages that revenue didn't shrink. It signaled a bottom. The cost-cutting measures initiated last year, the $10 billion in savings, the 15,000 layoffs, were painful. They were brutal for the culture. But from a shareholder perspective, they were necessary surgery. The company was bloated. If you use a tool like Schwab Intelligent Portfolios or have a managed account with Fidelity Wealth Management, your advisors are likely looking at operating leverage. That means for every dollar of new sales, how much drops to the bottom line? With a leaner workforce and tighter budget, Intel's operating leverage has improved massively. If they hit that $13.8 billion forecast for Q4, we could see a surprise in earnings per share that shocks the street. Let's discuss the IDM 2.0 model again because this is where the complexity lies. IDM stands for Integrated Device Manufacturer. Historically, Intel designed chips and built them. AMD designs chips but pays TSMC to build them. Nvidia designs chips, but pays TSMC to build them. Intel is trying to do both, make their own chips and make chips for others. This is incredibly difficult. It's like a restaurant trying to cook their own menu while also letting a rival chef use their kitchen to cook for a competing restaurant. There is a conflict of interest. Why would Apple or Nvidia trust Intel with their designs? This is where the legal separation of the Intel Foundry business unit comes in. They have erected a firewall between the design team and the manufacturing team. The market was skeptical of this firewall for a long time, but the recent Apple rumors suggest the firewall is working. Apple is the most secretive company on Earth. They wouldn't touch Intel with a 10-foot pole if they thought their IP would leak to Intel's product team. Now, for those of you trading actively on Interactive Brokers or using the Robinhood stock trading interface, you need to watch the technical setup on the chart. We are currently forming a higher-low pattern on the weekly chart. The stock bottomed out near $17 in late 2024. It rallied, pulled back, and is now consolidating at $40. This is bullish consolidation. It means the weak hands have sold and the stock is being accumulated by longer-term holders. But there is massive resistance at $42.50, the 52-week